gold really acts as a barometer, not a thermometer. You want to know how hot a day it is, you look at your thermometer. But if you look at if a storm is brewing or not, you look at the barometer. The barometer of gold is saying problems ahead. A lot of people start to wake up to the bull market in the metals and say, oh my goodness, I can't afford a gold coin at 3,200 an ounce, but I can still buy silver at $70. And that spillover really will take silver to, I think, outperform gold probably 2-1, 3-1, maybe 4-1.
What's the outlook for precious metals going into Q4 end of the year following a potential Fed pivot next week and what many people are calling a potential recession by year end? David Morgan is here to give us his forecast and update. He is the publisher of the Morgan Report and he's an expert on precious metals. Good to have you on the show, David. Welcome.
David Lynn, it's great to see you again. Thank you.
Yeah, good to see you. And let's start by talking about precious metals. Let me flip over to my screen first, and then we'll talk about precious metals, and then we'll talk about all the factors and drivers of the economy behind the precious metals prices. So here we have, if you look at my screen, a gold price chart. Year to date, gold is up tremendously. In fact, just today, we're speaking on the 13th of September, gold has broken new all-time highs this week, as you can see by this big uptick, this green bar. Let me overlay this with silver, however. I'm going to put silver on same percentage scale so we can see how they've grown together in the last couple of months. So year to date, silver has started to outperform gold, 28% up year to date versus gold's 25%. Over the last year, though, gold is still up more, 35% versus 34%. And roughly equal. I think the question that some silver investors have for you, David, is why is it that silver has not outperformed gold in this bull cycle? Typically, they move together, but typically silver has a higher beta to the upside and downside. So why is it that things are a bit different this time?
Tough one to answer, David. But first of all, if you go back, 20 years ago or whatever,
Yeah.
silver used to lead quite often. Now they do go back and forth. I think the fact is mostly psychology, which means, you take someone at my age and, we're still seeing silver coinage in the general population when I was a kid. And then that ended in 1965. But people my generation had a much more association with silver being money because they saw it in the coinage. And that lasted, I don't know how long, 10 years, 20 years. But now almost everybody, the next two generations, have looked at silver as an industrial commodity. And it doesn't really ever get spoken about anything in the mainstream media. I mean, they post a price of gold and silver every day on Bloomberg or any major financial channel, but seldom they even talk about it. And when they do, it's usually gold. Very seldom. I mean, I got on national TV probably 4, 5, 6 times in the bull run from 2000 2011, but that was pretty rare. So I do think it's more about people not knowing or being educated on precious metals generally, and then knowing more about gold or think they know more about gold than silver. But the dynamics for silver, once they understand it, I think you'll see more and more people come into the silver market. On top of that, I'll contradict myself. Even if people don't understand it, and gold gets to pick a level I don't know it, but 3,000, 3,200, a lot of people start to wake up to the bull market in the metals and say, oh my goodness, I can't afford a gold coin at 3,200 an ounce, but I can still buy silver at $70. And that spillover really will take silver to, I think, outperform gold probably 2-1, 3-1, maybe 4-1.
What's the catalyst for outperforming gold once more?
It's such a small market, and there's so much pent up money seeking a safe haven. So when that dam breaks, there'll be a flood of money into the precious metals. A lot of it will go into silver because it's more affordable.
Yeah. To your point about silver being traded like a industrial metal, let me just show my screen once more. This is the silver price, and I'm going to overlay that with copper. And I'm going to use a new price scale just to illustrate the correlation here. And over the last 1 year, very close correlation. As you can see, they've basically moved in lockstep. So we know copper is used for a variety of things, although from wiring in homes all the way to semiconductors. Can you tell us about some of the industrial use cases of silver that may explain why silver is trading so closely with copper?
Well, again, it's as you point out, David, it's tracked copper because it's perceived to be an industrial metal in most
Hmm.
cases. There is, You look at the percentages. 70% of the silver market's industrial usage. 4 or 5% is silverware, and you got maybe 10% in jewelry. So now what's left? 10%, 15% for investment demand. That's very small. But when you get a large investment demand, like had in 2020, where the investment demand was 320 million ounces on an institutional scale and 200 million ounces on a retail scale, for a 530 million ounces total, you had more than half of the total silver supply going into investment. That could happen again. It happened in 2020. That's a fact going forward. If the market gets scared and says, geez, I don't like stocks anymore, I'm scared about the housing market, I'm not too sure about my retirement, I'm going to hedge my bets, I'm going to buy some precious metals. Silver looks like a better buy than gold. Then you could see a large increase in institutional purchases in the silver market again.
I want to take a minute now to talk about different ways to invest in silver. As you may know, silver has been one of the top performing asset classes in the first half of 2024. So, how can we leverage silver's gains? I'm here to tell you that today's sponsor, Kootenay Silver, has great leverage to the silver price. Kootenay has a leading growth profile highlighted by one of the largest junior-owned silver asset bases in Mexico. The company has a 20,000-meter program underway at the high-grade Columba silver property to conclude in the maiden resource. Kootenay is holding over 200 million ounces in the measured and indicated categories at the company's Promontorio and La Cigarra projects. The company has an experienced management team with a track record of success from exploration, discovery, finance, and production. If you're looking for a company that will leverage the potential gains of the silver market, do your due diligence on Kootenay Silver, ticker KTN on the TSXV. Learn more about the company in the link down below or scan the QR code here. Do you think that this recent uptick in silver and gold and copper are they indicating, I guess, economic stability? I know that people were concerned about the economy in the last couple of months, especially since copper and some other base metals, including silver, have been falling. But now that we've seen a surge, are fears perhaps reversing, do you think?
I think that gold really acts as a barometer, not a thermometer. You want to know how hot a day it is, you look at your thermometer. But if you look at if a storm is brewing or not, you look at the barometer. Barometer of gold is saying problems ahead. It wouldn't be doing that if it didn't forecast the future, which is what gold does. So it's forecasting us stormy times are ahead. I'm looking for gold to probably exceed today's price, which are in the 2,600 level by the end of the year. Could we hit 3,000 by the end of the year? I wouldn't say we won't or we couldn't. I think it's unlikely, but I think we're going to see higher prices. We are going to get a pullback here pretty soon. It is overbought technically, but things could stay overbought for a very long time.
Well, tell us about some of these storm indicators. So gold is signaling trouble ahead. What are these troubles that are propping up the price, you think?
There's a couple major ones, David. First of all, we have a major contraction in the global economy. So if you just type into a search engine, how many retail businesses are out of business from the year 2000 till now, or pick another date, you're going to find massive amounts of retail have been either gone bankrupt and are totally out of business, or food chains and other conglomerates that own, chain stores like be it electronics or restaurant. The restaurant business is one of the best because even very good restaurant chains have downsized by 30%, 40%, 50%. They're only keeping 20% of their stores open, that type of thing. The mall situation in the United States is horrendous. It used to be one of the major hangouts for young people, and now a lot of malls are just ghost towns. If you look at downtown San Jose, I just watched this video yesterday. A guy took his camera. I was in high school in San Jose, and down First Street and Second Street, there were hardly any businesses open. Everything was shuttered, for lease, for rent, we'll build to suit, all that stuff. It's just a ghost town. San Jose isn't the only place. And San Jose is right next to Silicon Valley. So if San Jose, right next to Silicon Valley, is doing that bad in the downtown sector, we know the commercial real estate problem in the United States is massive, but very few people are talking about it. So the bottom line is global economy is contracting. We have less. Less of everything means a lower standard of living, not a higher standard of living. So I think the market barometer is showing that's what's ahead. And then you go onto the geopolitical side as far as ideologies are concerned, and we get the New World Order and all the people, many that view our type of shows are like, the one worlders and all that. I go along with part of that. But you also see a contraction in me first. Take Mexico, for example, with lithium, and it's been nationalized. What happens is the economy gets physical economy. And I'm not talking about the financial markets that don't reflect the real economy. The gold knows the real economy. So coming back to that thesis, it says, wait a minute, this nation state's going to hold on to their silver because they're not getting a fair price for it, or they don't want dollars anymore. They want, BRICS currency or whatever's in our future. So that's the two things it's signaling. An overall deflating amount of physical goods and services in the global economy, and also a more nationalistic me first. I got to look out for my people, beyond what you'd hear from the one worlders saying, we've got it all under control and it's one world governance. That is not, in my view, a guarantee.
All right, we're going to break that down. Let's talk about the business side first, since you brought that up. As you were talking, I did exactly as you said. Put on a search engine. I use ChatGPT. How many retail businesses have gone bankrupt in the last year? According to the search results that it came up with, we had a 34% increase in commercial bankruptcy filings in the last half of the year compared to 2023. For the broader context, total bankruptcy filings, including personal and business, rose 16.2% over the last 12 months. This is just the last year. I didn't even put in the last 10 or 5 years like you were talking about. But okay, David, to your point, small businesses are slowing down. Now, there's been a lot of speculation as to whether or not we can turn this around. Can the government turn this around, you think? By the way, I'm just bringing up the election because that's trending. Kamala Harris promised to incentivize small businesses and startups with a $50,000, what appears to be a grant. It used to be $5,000 to help startups. Now she's raising that to $50,000. So could we possibly turn this around in the coming years, you think?
Well, I hate to be pessimistic or sound that way. I doubt it. There's always a possibility. The problem is it really doesn't stem from government. I mean, the real way to work your way out of it is let the free market be free, and then have less restrictions, and let the marketplace itself reprice everything, and then you could maybe get enough increase where you could actually start to pay down the debt. I really doubt it. I think we're past the point of no return mathematically. I see very little likelihood, but I think the government will do everything in their hat of tricks to pull out whatever they think will work. None of it will, in my view, but it'll obfuscate the real problem because they created the problem. They can't really create the solution. I mean, the only way to really create the solution is to really cut back well beyond what anyone politically, either party, is willing to do. And that's why, unfortunately, these type of massive inflationary bubbles usually pop on their own without any input. The market itself just says, look, I don't accept these US dollars anymore. I don't know how much they're going to be worth, in a month from now. Will we get to the US dollar? Highly doubt it. But the psychology is, oh my goodness, I better spend this dollar now rather than next month or the next paycheck because it's losing value so fast. I fear what I'm going to be able to buy.
On the pro growth camp, this is just another argument. People say that, well, interest rates could be coming down after a Fed pivot. And even though prices are still high compared to a few years ago, the rate of inflation, which is the rate of change of prices, has slowed down somewhat. So perhaps businesses could see improved margins with lower interest costs and lower inflation overall. And that may help them survive. What do you think?
Well, I think everything you said is spot on correct. But I also would argue that the markets are so distorted and convoluted right now that a lot of these gains are going to be in the bond people, making a profit on the bonds because as interest rates come down, bond prices go up. So there'll be tons of money that will make, quote unquote, more money without producing anything physically beneficial to society or the economy. And so I think the idea is that through these business cycles, you lower rates and, you can reboot the economy and start growth and start getting better tax receipts and all those things we taught in business school. But at this point in time, I don't think it could do very much because there's so much systemic inflation that's been built in where the average person, even the average small business owner, knows how much it costs, how much more it costs for groceries how much more it costs for labor, how much more it costs for almost anything going into a business, electricity costs, cost of the building or whatever. So there's a lot of costs that are already a big hurdle. So yeah, the rate comes down. It goes from, the high of 8%, it's now 2%. Whoop-de-doo. I still have to pay, let's say, 50% more starting a business today than what I would have started a business in, say, 2020. So now those costs have to be overcome, which means your prices have got to be higher than what you might have charged 5 years earlier. Hope I'm making sense, because the pervasiveness of inflation is what most people don't understand, especially when it's low. But once it starts to get to a certain rate, then the inflation psychology takes over and people can't get it out of their heads.
So the CPI, headline CPI has been steadily falling. The latest reading came in a little bit higher than expected, however. Um, what is your overall read? Do you think that we're going to get a return of inflation in the US?
I do, and I want to make a couple comments because I know how smart you are, and I always prepare, but prepare for you a little more than I normally
Oh,
do.
I appreciate it.
So, well, I looked up the CPI from the year 2000. I said, okay, I bought gold in 2000 at 252, the bottom. What would it cost me today? And according to the government's numbers, it'd be roughly double. But then I looked at the money supply, which is also a government statistic, and the money supply from 2000 now is up 20-fold. So if you look at gold as the barometer, gold went from 250 to 2,500, round numbers. It's up tenfold. Yet the money supply is up 20-fold. M1, if you want to look it up. So what I'm suggesting is that gold is keeping pace with the general trend, but it really hasn't caught up to the total amount of, let's say, funding money that's been printed over the last decade, 2 decades, and 2 decades or more. But it is doing its job, and so, and you could argue. I mean, these are, these are aggregate numbers. I mean, it's the total inflation, and what do they put in inflation? Is, we all jokingly know, food and energy been eliminated, which are the two things humans need the most. But regardless, we've got a huge increase in money supply. Gold's reflected that, and I think it's still got a long ways to go.
By the way, speaking of the money supply, since you brought that up, here is the M2. I know you talked about M1, but here's M2 just on the St. Louis Fed website. And I'm showing this as an annual percent change basis. So uh, let me actually just change this to percentage change from a year ago. Okay, so now, in the last year and a half, 2 years, 3 years almost, the percentage change from a year ago of the money supply has been trending down. It's bottom, troughed, now it's going back up. What does that mean for financial assets going forward, you think?
A tough one. First of all, let me just comment on it coming down. I mean, that's deflationary, and that's really to get a handle so the dollar has more value. But now it's gone the other way, and you're asking what will happen. I think it'll continue to push all financial assets higher. Unfortunately, if you go back to history, we know what happens. Will this happen in the U.S. markets or not? We don't know. What we do know is if you overinflate, then the Weimar Republic, Zimbabwe, Argentina, any of these smaller countries, their stock markets just keep going up, up and up and up and up, because it's the only place most people could get into to mitigate some of the destruction of the currency. Will that happen in the US or not? I don't know. I mean, it took us 200 years to get $1 trillion in debt. Now, after 200 years, we're adding $1 trillion almost every quarter to the US debt basis. So we are accelerating or going exponential here on the the money supply. M2 coming down really was a breather and kind of paused the markets. Now that we're lowering interest rates, the market smells that, and gold, the barometer, is showing us ahead. Probably going to see more of the same, which means more depreciation of the currency, more destruction of the dollar, and that means more dollars to purchase whatever you want to talk about, stocks, the grocery store, wherever.
Okay, I've zoomed out this chart here. So this is now showing the same thing except zoomed out all the way back to 1950, well, 1960. And it's interesting to note that in the history of the US, not since basically the Second World War or before that, the Great Depression, how we had the M2 contract in negative territory. Usually it's the growth has fallen, but it was still growing at 1.6%, 0.5%. Very rarely has it actually gone to negative territory. A lot of economists were speculating that this would cause a huge contraction of the economy, but we didn't get a recession this year, even though remember last year we had 2 quarters of consecutive negative GDP, and people said that's not a recession,
I
right? That
remember.
happened. Yeah.
Yeah.
And then, but are you just surprised that this happened and we didn't get a gray bar here that designates a recession?
I am, but it's the inconsistency of the political class and our mainstream economists. I mean, by definition, we've hit one, but they don't acknowledge it. I don't worry too much about, the mainstream. Obviously, I've been an intuitive and thinker and a contrarian most of my life.
Sure.
I never say they're wrong. It's just the metrics they use keep changing. So, it's like changing a yardstick when you're building a house. What kind of a foundation we have? So if we keep changing what the CPI is actually comprised of or what the money supply looks like, and that's a given. I mean, this dip down there really should have really cooled off the economy. And it certainly has changed the rate of inflation, but we still have inflation. So again, gold saying, look out. I think we've got more currency destruction ahead. I think they had the opportunity to keep it going and really scare the heck out of the markets. But I think the Fed has got enough pressure on them where they're pretty much throwing in the towel. And throwing in the towel means, as I've said 3 times already,
Yeah.
the foreign
One
exchange markets are going to be in havoc.
one explanation is fiscal dominance. So here's an article from CNBC rather. According to a Penn Wharton budget study, former President Donald Trump's economic proposals would increase federal deficits by $5.8 trillion over the next decade, almost 5 times more than VP Kamala Harris, which would add $1.2 trillion. So either candidate, they're saying, would increase the deficit over the next decade. Trump's a little bit more. First of all, do you agree that we're going to head into a period where we're going to get a lot more debt, a lot more deficit?
I do. That's a trend in motion that's really, really going to take down the global economy. I mean, not take it down to nothing happens, but curtail a lot of it. The trend of contraction will continue, and the trend of trying to print your way out of it.
Again, what does that mean for inflation and assets? I mean, on the one hand, we have, both candidates wanting to fight inflation with their own measures. Trump increasing energy output, Kamala fighting price gouging. So, if fighting inflation is on the agenda, but like you pointed out, we're going to get an increase in the deficit. So, are we going to get a counterbalance in the forces here, or is it leaning more towards the inflation side?
What we're going to see, David, is we're going to see businesses kind of tighten their belt and do the best they can to keep a profit margin and stay in business. But if inflation continues, as I see it, if you're asking me my strong, studied opinion, you're going to see a labor bounce back. In other words, people are going to say, wait a minute, you got to pay me more. Groceries are costing me too much. And this is what the Fed tried to avoid by being really kind of tough on going with these higher interest rates to kind of curtail that. The problem is it didn't work, in my opinion. And so time will tell. I could be wrong. I hope I'm wrong. But I'm looking out 6 months, year and a half at the most, where the pressures come back so strong that you're going to find in Canada, in the United States, in Australia, in Europe, people are saying, I need more money. This money isn't working. I got to pay more for fill in the blank. There will be some things that come down. My TV went out recently and I bought a TV from Amazon, $200. I mean, it's absolutely nothing compared to what I'm paying for food or my other bills. But I have to admit, the electronics sector is still getting cheaper and better all the time.
Okay. What's the Federal Reserve going to do for the economy? Is a 25 or even 50 basis point cut next week? If they do cut, is that enough to stave off a recession, you think?
No, it's not. But I think there'll be a lot of rhetoric around it. We're on our way, and this is the first of many, and we were conservative only 25 basis points. Maybe they'll do 50, but we've got it solved. They're going to put on their regular dogged publishing. They're going to tell us they have it under control. But if you actually went in with the secret camera and sat down and talked to some of these Fed governors or Powell himself, they were honest. They'd tell you they don't know what to do.
Are you concerned about another banking crisis? David, earlier this year, we had one or two bank failures. Last year, of course, that made headlines around March. Uh, Government came in to backstop it, and now it's kind of died down from the news. What do you think is going to happen next?
I'm always scared about a banking crisis. I'm probably overly scared. I try to mitigate it. I try to be objective. I try to just look at the facts. But when Barings Bank went out, probably before you were born, David, that was one of the stalwart banks in the UK for centuries. I thought, man, this is it, because these banks are all interconnected. When you have a big money center bank like that goes down, it usually takes a lot of other banks with it. But in the paper money chase, you always have the central bank that's able to come in and throw some digits on a computer and throw them at the banks. No, 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 it's okay, it's okay. And that's really what's taking place. But it's still possible that we will have bank failures. We've already seen them. Silicon Valley Bank, I think it was the second biggest to fail in the last decade or two. So it does scare me because they are interconnected and there is not a lot of solvency left in the banking system. I mean, if everybody went to get their money out at one time, it's impossible. But that's based on the rules of on a fractional reserve system. I don't know, David. There's 67 banks that are on the watch list. Last time I changed, I'm sure that number has changed by now, but that's enough. Is that enough dominoes to fall to hit a bunch of other dominoes? I don't know. That's not what you want to see happen. The systemic risk is what we want to avoid. We don't want, bank A, B, and C taken out. Three banks go down and take six more down and take 18 more down and take 36 more down. We don't want that. And I think the Fed's mitigated that, especially in 2008. And they've come to the rescue here, as you outlined here recently. Can they continue to do it? I don't know. Could it get away from them? That's the stance I'm taking. Could, not would. The probabilities are low. But in 2008, we got a lot closer than most people know.
Well, then ultimately, your intuition, what does that tell you in terms of capital flows? We talked about bonds. I think you said if interest rates go down, possibly bullish in bonds. Where do you think investors are going to put their capital into the next year? Is it going to be more risk assets? Is it going to be more defensive stocks? Is it going to be precious metals? Is it going to be bonds, real estate, hard assets? What's going to
Very
happen?
sophisticated will be in the bond market. It's the biggest, most liquid market out
Sure.
there. The newbies, or I should say, the new people and seasoned investors both will see an asset shift. So stocks maybe not so good, real estate not what I expected. I'm moving into, and it'll flow into the precious metals, some of it. I think you'll see, uh, durable goods and the safety type things, utilities, that type of thing, more emphasis. The market will be looking for value stocks, and one of the best value stocks all across the board are actually the gold miners. The gold miners have got huge margins in many cases. And those bottom line numbers will start coming to anyone that runs their algorithm on a value based business, not caring what the business is, just show me who's making money. And the gold miners are. So they're undervalued. So I think we've started the turn, the run to gold that I like to talk about. There's no fever like gold fever, all these little cute sayings around this industry. But the truth is they're there for a reason. And so I think the run to gold has started with the central banks buying what they've done in the last couple of years. That set the foundation. Now we're starting to see some of the major hedge funds come into gold. We're seeing some pensions come into gold. And so I think that trickle is starting to become a flow. And I think the trend is pretty clear that we're going to see more and more change of asset allocation from financial paper assets into the hard money camp, commodities, durable goods, and things of, let's say, true value, or more of a value investing approach rather than a follow me in the tech sector approach.
What's your explanation for why the central banks, especially the Eastern central banks last year, bought so much gold?
Two reasons. One, it's the money of last resort. So in the worst case banking crisis, if there is one, they have a foundation to restart. The second one is mistrust of the dollar, that the dollar dominance is starting to unravel slowly, but yet you see more and more countries that are coming into the BRICS, which is really nothing all that unique. It's basically a consortium of countries that say we'll trade in each other's currency, circumventing the dollar, which means you don't have to have a dollar-based commodity situation where everything has to be paid for in dollars. Not anymore.
Okay. Let's talk about the dollar now. This is the DXY, so the dollar versus a basket of other currencies. Over the last year, or year to date, you can see the DXY has basically erased the strength that it's gained in the first half of the year. If you zoom out, however, in the last 5 years, it just looks like it's been trading range bound. So do you have a medium term outlook for us for the DXY, given the fact that the Fed is cutting, but other central banks as well?
More of the same. I think it's going to continue sideways for a while. I mean, I remember when I started in on the internet about 1999, the DXY was 120.
Yeah.
And I predicted, the market's coming down, and it went from 120 down to I think 70 something. And that was the run in gold. I mean, we went into 2000 at
Hmm.
252 and we ended in September 2011 and 2000. I mean, we had like an eightfold increase. We had 11 straight years of a gold bull market. And then when you see where we got the bottom, then, we started to come up and, we got into this long sideways to down for gold. Now, of course, we're making new highs, as we both know, but it was a long period of consolidation, much longer, David, than I anticipated. I thought I called the top in 2011, by the way. I said, this is it. And I said, this is it for a while. My a while was 2 or 3 years. Well, I was wrong. A while was until, last year or so.
Hmm. Well, let's talk about that. Do you think gold could repeat 2012, which is to say, in today's environment, it could go down from, you were talking about 2011's highs, um, from 1800 all the way back down to about 1000? That's an 80%. It's like yeah, it's a 50% drop. But yeah, could we see that again this time? I mean, are the conditions ripe for that kind of drop this time around, you think?
There will be eventually, but not right now. No, I mean, right now
Okay.
the trend is up, and the third leg up is usually the strongest as far as it's slow. It's the fastest in duration, and it's also the biggest in move. Normally, I mean, things all can change. So if we get that move from what I keep talking about, 250 to 1800, we could expect at least that big a gain on the next leg up. So whatever that factor is, what, five or six? So
Yeah.
take 2,000 and multiply it by six, five. I mean, you got $10,000 goal, which sounds absurd, but basis what the money supply is, it really isn't. So we could see a lot. We could go up fourfold from here over the next several years. And once we get there, yeah, we could get a retracement. It depends if we're not in a new monetary system. If we're still in the US dollar based reserve currency system, I'd expect somewhat of a repeat. I don't expect that, David. I think we're going to
Mhm.
switch into a new system before in the next 3 years or less.
What's this new system going to look like?
I don't know exactly. I know what the central bankers have said. Mark Carney has made three speeches. He's not the lead of the Bank of England anymore, but Bank of England, the United Nations, Jackson, Wyoming. He said that they want a digital currency that's unbacked by anything with modern money theory. They want to be able to print as many digits as they have, and he hinted at a cashless society. That's what they're shooting. Will they get it? I doubt it, but I think they'll at least do a trial balloon on it as things start to, let's say, get more interesting as we go forward.
And you think that's going to push people into hard assets?
I think a lot of people understand what's going on will. Yes.
Ultimately, then, are you more bullish on gold right now or silver?
Right now, gold, but longer term, silver.
Okay. Well, speaking of long term, I think some silver investors would like to understand why it is that gold has reached new all-time highs several times in the last 4 or 5 years, but silver hasn't retraced its $50 highs. What happened there?
What happened was what we talked about earlier, David. If you go back in history and you look at gold and silver, the ratio was under 20 to 1. So the most you had to pay for an ounce of gold was 20 ounces of silver. That held for hundreds and hundreds of years, 13th century, 14th century, 15th century. It wasn't until the end of the 18th century where silver was really demonetized. So if the banks treated silver as a monetary asset, believing the ratio wouldn't be 85 to 1. The ratio would be more like the classic ratio of 15 to 1 or maybe even 10 to 1. But silver is being used in industry at 70% of the market, as we outlined earlier. So any new buying on the monetary side will take the price far, far higher. And so two things, as we said, when gold gets too high a price for people to afford it, it'll spill into the silver market. And then you've got a dual demand on silver. You got, Elon Musk and Samsung and 3M and all these corporations that need silver. They're out of business. Well, they'll have to buy it and stockpile it if it starts to get a tight supply. And then the investor community will see that. And so they'll come on board. So it'll be like a double dip where you get a kind of a shark feeding frenzy potentially, where both those demands come at the same time. So it's a simple word, money. When silver is money, it really follows gold or leads gold. When silver is no longer money, then we're in a situation where we are now, where just a tiny amount of the market has to consider it to be money or a hard asset. I mean, you look at the rhodium market, rhodium certainly isn't monetary metals, never thought to be, but people knew it was scarce supply. And palladium was the same thing. I made a great palladium trade. And I don't consider palladium money. I mean, I could argue classically it is, but coming back on point. So you can just take the approach it's industrial only. The silver doesn't ask, are you buying me for industry? You're buying me for investment. It doesn't care. But the demand is there. The demand is there.
Okay, so you're saying that gold could or may not reach $3,000, but more likely to retrace. We're breaking new all-time high to $2,600 by year end. So silver's had a good run so far. $30 today. Shot up a lot in the last week or so. Started off the year around $23. So we're looking about a 30%, 33% increase year to date. Do you think it could close above 35 by the end of the year?
It could. Yeah, really is interesting. What's interesting is that I have a couple sources in China, and one of them told me that the Chinese public is starting to buy silver again, first time in about 50 years. Well, I had this guy on LinkedIn reach out to me, and he, had all this information. He looked legit. I looked at his profile. I spent some time, doing a little background as much as you can. And so I asked him, I go, I got the source and he says this, and he verified it. He said, absolutely, the guy's spot on. He goes, the Chinese people are really looking at buying silver now.
What's one use case of silver that you think would, industrial wise, that you think would really push demand up significantly?
Well, of course, solar is obvious. I mean, that's what's really run the market. It's this, amount of photovoltaics that are being bought. What's above and beyond that is I really don't know. Maybe it could be anything in the electrical sphere. Probably could be batteries. I mean, I think no one ever talks about, silver batteries, but you have a silver battery in a pacemaker. You have it for your hearing aids. Silver batteries are very small, very efficient, and last a long time. So when you have a situation where you need, power, no drainage, there's a lot of advantages. The reason you don't see many silver batteries, except in those small applications, is cost. Silver, as cheap as it is much more costly than doing a lead acid battery or lithium battery or that type of thing. So the push is for the cheaper ones, which is what, basic economics. If I can get the same power out of a lithium battery and it only costs me this much to make, why would I use a silver battery? But if you look at the military and mil specs, a lot of those batteries are silver based because they have to be rugged, they have to charge fast, they have to be reliable, and they have to last a long time. So I think that's an area that could, not necessarily would, come to the fore, but you get this EV thing and you start using a silver battery or two, just some guys goofing off, and all of a sudden they see how fast they can charge it and how long it lasts, and the recycling of it makes you money, doesn't cost you money. There might be something to it.
Have you talked to the silver miners at all? And in regards to production, I mean, on the one hand, we can expect silver demand to continue going up for the reasons we've talked about, but can we expect supply to outpace demand?
No, talked to many, and many of them Mexico, but many of them conglomerates, the Pan Americans, the Agnico Eagles. And what you find is that silver mining has been flat for about the last decade, and it's probably going to continue. If you look at some of the largest silver mines in the world, like Fresnillo, Peñoles, the Polish mine, their grades are going down, not up, which means they got to dig more dirt to get the same amount of metal out. And that's a sign of a deteriorating market, not an increasing market. I think all the really cheap silver has been mined so far. There could be a discovery or two, but that would be it. I don't think you're going to see a big increase. So there's going to be a push to get more recycled silver than there is now. I think that's one area that will be looked at further and further. And as far as the mining systems go, I don't see a change. I see it going flat for the next 5 years anyway. And by the way, as you know, Matt Watson, we talked about him earlier, a year or two ago. He's the same idea that the basis going forward for mining and recycling is going to be flat for at least the next 10 years, in his opinion.
Yes, absolutely. All right. Well, I appreciate your thoughts, David. Where can we learn more about you? Read your work?
You can go to themorganreport.com. And I'd just like to take a couple of minutes, David, and just let everybody know I'm working on a documentary. It's about overcoming the fear, stress, and control of money. It's called silversunrise.tv. And it kind of takes not only the hard look at money and honest money and all the things I'm involved, but it also takes more of a holistic view of money and how much control it has over our lives and why that is and how to break free of that.
Yeah, give us a teaser. That sounds interesting. What's your philosophy around how money controls us?
Well, it's basically, if you look at the political class mainly, I think that's where you can see it the most. And, these lobby groups that come in and, give these Congress critters and senators all these funds for their campaigns. And all of a sudden you see what their voting is like. And their voting usually goes along with the lobbyists want. You also see some of the legislative proposals that are done with a new bill proposed in Congress. You think that Congress critter with his staff wrote it? No, the lobbyist wrote it with their group. The staff might have gone in and edited it or fought back a little bit here and there. So really, money's running the country, which is unfortunate. It's not unique to the United States, but that's what I talk about, the money power. And this, of course, is something that doesn't sit well with me personally and most freedom lovers either. I mean, we really want, if we want a democratic society, we want our say. We don't want a group of rich corporations telling our political class what they want.
Very good. Thank you very much, David. I appreciate your thoughts. I appreciate you coming on the show, and it's good to see that you're doing well and in good health. So we'll keep in touch with the audience, and we'll make sure you come back again and educate us more about silver. Thank you,
My pleasure, David. Thank you.
and thank you for watching. Don't forget to like and subscribe and follow David in the links down below.